It is Tuesday, October 29th, and here at Freedom Finances, we are talking about the labor market. Today, I wrote an article about the job market and some updates from the United States Bureau of Labor Statistics, which we're going to go over. Just a few weeks ago, we were told that the labor market was very strong. The stock market reflected some amazing numbers. We were told that there are all-time highs, but we're going to go over why just within a few weeks we can go from the labor market is booming, we should all have amazing news, to we have some skepticism all of a sudden and job openings are falling. So let's go ahead and start with the job openings and labor summary today for September 2024. And really what this news talks about is the job turnover, which means how many people left their jobs, how many people were fired, how many people quit, how many job openings there are, and how many people are actually hiring. So right now it says the number of job openings was little changed at 7.4 million on the last business day of September, the U.S. Bureau of Labor Statistics reported today. Over the month, hires have changed little as well at 5.6 million. The number of total separations was unchanged to 5.2 million. With separations, quits 3.1 million, and layoffs and discharges at 1.8 million changed little. So let's talk about what this means, and we're going to go over to a Yahoo Finance report, which actually gives a good visual summary of what this all means and why the job openings falling is the lowest in a few years. So this is where we're at right now. This orange line is job openings. We can see we're right now at 7.44 million for September. We peaked in March of 2022 at 12.18 million. And more than a year before, we were at 7.82 million. So February 2021 to September 2024, we are about the same amount. That's more than 3.5 years later. We're looking at a falling job market, but job openings is not as important as hiring. As you can see here, 12.18 million. That's not how many people are actually getting hired. When March 2022 came along and there were 12.18 job openings, let's see how many people were actually being hired. 6.62 million. And the next month, 6.58 million. So there really weren't that many people being hired during that time. As you can see from this green line, it fluctuated quite a bit, about 6 million difference. Now, the the openings are actually coming down to better reflect the hiring. The hiring has really changed not too much in the last 2.5 years. However, it has steadily gone down since November of 2021, February of 2022. And that's really what's important is we're seeing a small trend line of hiring going down. Now, we've been told over and over again, it was just here when we were told that the job market is amazing in August 2024, when there were 7.86 million people or 7.86 million job openings, but at the same time, only 5.44 million people were being hired. I really don't understand. Maybe you can tell me how this shows that the labor market is strong. In fact, since February of 2022, the labor market has really only gone steadily down. It's had some few bumps upwards, only to decrease. So a lot of people, anytime there's one small piece of good news in the labor market, maybe a quick bump, everyone loses their minds and thinks that the labor market's strong, best economy in years, when really this is the trend line. This right here, this little bump up, this is when people get all excited and they start saying everything's amazing. But you can see the job openings are steadily going down. Right now, long-term unemployment is a big difficulty in this country. There's this amazing article from Brookings that talks about long-term unemployment being very, very, very difficult to find a job. So essentially, if you've been unemployed for 27 weeks or more, you only have an 11% chance that you're going to be given employment within a year. So really you want to be able to find a job within half a year of getting unemployed, because once you do, it's very likely within the next half of that year you're not going to be able to find a job. That's just what the statistics say, and this is a great article from Brookings. I reference it here in the article, so you can definitely take a look at it. And the job history over the last few years has been really, really difficult. We have a Congressional Research Service here talking about the Sahm Rule. The Sahm Rule essentially states that if the unemployment rate over the last 3 months is higher than it has been for the last rolling 12 months, then the U.S. is entering a recession. Now, we've hit this Sahm Rule, we've hit this trigger over the last few months, and Congressional Research Service said about 2 months ago that likely we're not actually in a recession. There's a good chance that we're not in a strong labor market, but we're probably not in a recession. We can read right here. There's no theoretical reason why the criteria used in the Sahm Rule is associated with a recession. It is an observed historical relation for a small sample and may not always hold going forward. Sahm herself has indicated that despite her rule getting triggered, she does not believe that the United States is currently in a recession, although she believes that the risk of recession has increased. Essentially, what this is saying is the Sahm Rule has been triggered, at least back in August. We had worse unemployment over a 3-month period than we had over a 12-month period. But essentially what this is saying is, yeah, maybe the Sahm Rule isn't perfect. Maybe that the Sahm Rule is showing that, yes, there's a trigger, as we can see right here, which means we went over it and there was actually a recession. These gray spots on these bars actually show when there was a recession. There was a clear recession here in 2008 during the economic crisis. There was a very small recession during the COVID era. But right now, have we actually hit a recession? Well, let's look at this chart. A spike here in the 1960s, another spike here in the early 70s, another spike in the 70s again, a couple more spikes in the late 70s. The late 70s were a tough time for jobs in the U.S. One quick spike here in 92. We have the dot-com bubble burst right here in the early 2000s. That's when we had another recession. Of course, we had the economic mortgage crisis of 2008, which was a pretty long, sustained recession, a very brief one for COVID. And the question is, we look at this chart right here. Is it going up? Are we going into a recession? And the Sahm Rule is showing if we keep going up at this pace, we are definitely going to hit a recession. Right now, we probably don't have a recession, is what this article is saying. It's pretty difficult to say. Part of the Sahm Rule itself is that if it's triggered, we may not even know we're in a recession. So in a year from now, looking back at this discussion today, this may go all the way up to maybe 2 percentage points. And then we're like, yeah, we were definitely in a recession. We just didn't know it yet. That's a little bit about the Sahm Rule, just some scientific data to show whether or not the economy is strong. Next, we're going to talk about the unemployment rate. So the unemployment rate is 4.1%. That's what it dropped to in 2024. The lowest in 3 months, down from 4.2%. So unemployment rate is a very subjective number depending on who you're asking. Let's take a look of why 7.1 million people is such an important thing when we look at the unemployment rate. Right here, we have 5.56 million in hirings. Remember, we have 7.1 million people who are unemployed. Now, those 5.56 million aren't just going to go to that 7.1 million people who are unemployed, because we also have people who are losing their job, who are getting laid off, who are quitting their job, who are getting fired, but those people may quickly enter back in. So that's a rolling 7.1 million. What's important, though, is we have 7.1 million people who are unemployed, but we only have 7.44 million job openings. We have about 0.3 million, which is around 300, maybe 330,000 people, or 330,000 jobs available outside of the people who are unemployed. which is a pretty sticky situation. 7.1 million unemployed isn't a great number. It's not the worst number we've ever seen. What is difficult, however, is the amount of jobs that are open and the fact that hiring has gone down for 2+ straight years. It just keeps going down and down. Again, it goes up a little bit some months, but it has been going down. Yet people unemployed is at a pretty difficult number for this to sustain. Job openings and job hirings will not sustain the amount of people who are unemployed. We go back to the recession discussion. It's really difficult to say whether or not we're in a recession. Some people are really caught up in saying the economy is strong. Some people are really caught up in saying the economy is difficult. I like to look at it from the number of our labor market, and the labor market is simply it's weak or stagnant at best. It's not a strong labor market. What we need to do, though, is discuss how to look at these things going forward. Ultimately, here at Freedom Finances, we simply want to bring you news, facts, finance news, labor news, market news to make your life easier, to make you more financially literate, to make your job search better, to make your careers better. We don't care about politics. We don't care about ideology. What we care about are facts, data, and how to make you smarter. I hope I was able to help you with that today. My name is Bradley Valentine. Have a great day.